Hello everyone, how's it going? In this video, we will talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very interesting company to trade recently, with high volatilities and also many projects that may fuel future speculations. At the same time, it's a company that the market tends to not trust too much with the capital, especially when it comes to long-term investment. So, in today's video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation to hopefully see what is the best course of action to carry out regarding Mullen. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. Mullen recently made headlines on Wednesday as their stock experienced a very remarkable surge in stock value. That surge came after the company has announced that they have enlisted the help or the assistance of a law firm in order to, how can I put this, in order to address the activities known as naked short selling. Now, many people may be wondering what naked short selling is. It's basically when people put like a position against a stock in a manipulative manner. So let's dive into the numbers in order to better understand what all this means. During the afternoon trading, Mullen stock, represented by the ticker symbol MULN, jumped by a whopping 60%. This is very significant considering that it has just recently hit a record low of around 10 cents on Monday. The trading volume on this day significantly increased to more than 1 billion shares, which is more than double of the previous one-day record set on June 21st, 2023, and almost 7 times the actual average volume of the past 30 days. It's important to remember that Mullen Automotive is facing very significant challenges during the month of June, and not just the month of June. Their stock has been plummeting in value by, I think, something like 85%. And the company has had some positive news announcements over the past few weeks, such as their first recorded revenue and the fact that they have enough money to last 12 months. Despite all this, the stock seems to be suffering significantly. So upon the announcement of this partnership with a law firm, Mullen has seen their stock skyrocketing just because of this fact. In fact, the company's CEO David Mitchery expressed his commitment to combat what he calls manipulators using naked short selling and other similar acts. In the past 3 months, Mullen's stock price experienced a substantial decline by more than 93%. On the other hand, Global X Autonomous and Electric Vehicles Exchange Traded Fund has seen a 15.1% increase. The S&P has increased by more than 9%. So these are just to provide some perspective in the difference of treatment between Mullen and the rest of the market, even when things are bearish. Now, let's also take a look at the technicals. The trading volume, like we mentioned, has recently been around 1.3 billion shares, compared to the average volume of just 290 million shares. Over the previous 52-week period, the price fluctuated between 10 cents and $35. The volume of shares traded tells us how many shares are being bought and sold at any given point, if there's enough liquidity to support a trading strategy. If the float is thin, it would be easy to influence the stock price, but low liquidity could also mean the demand is limited too. When we compare the current volume against the average volume, there might be the possibility for trend reversal or the breakthrough if the difference is super large. For example, now is a good showcase of this scenario. We are seeing a breakthrough in Mullen, at least in the short to medium term. The market cap of Mullen is currently $17 million for an enterprise value of $17.3 million. As we compare the current price to the historical price fluctuations, the stock is 71% higher than the 1-month low, 71% higher than the 3-month low, and 71% higher than the 52-week low. On the options market, which gives us a hint about the market sentiment about where the stock price may likely head next, the implied volatility is currently 548% versus the historical volatility of 265%. The put-call volume ratio is currently 0.06, meaning most people believe that Mullen will go higher before it dips again. The most recent volume of options traded is 120,000 contracts in a day versus the 30-day average of 35,000. In terms of open interest, the most recent volume of open interest is 1 million contracts versus the 30-day average of 1 million contracts as well. The current short interest is around 17% of the total float and around 60% of the transactions from dark pools. So if the short interest is above 15%, usually there is a case to be made regarding, naked shorts or short squeezes. With that being said, the fact that Mullen has hired a firm to address like 17% of the total float being shorted, it's pushing a little bit. Okay, I'm not saying that he doesn't have a point here. I'm just saying that maybe that's not the only thing that explains why Mullen has been dipping so hard in the market over the past few days. Mullen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, XPeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing iGos in Europe, so this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. My recommendation is to stand on the side for the time being, but wait to see if Mullen can stay above 20 cents in a sustained manner for the upcoming few days. If it can, then I would say that the entry point could be considered for the time being, like now, as long as you remain within the allocated amount and are comfortable with the level of risks involved, which is very high. I would recommend to commit between 0.5 to 1% of your portfolio, and to split the allocations in batches of 10 to 20% for further retracements if applicable.